this is how I pick up Propnex. I just play with my stock screener. Okay. So what I did was I used the filter. I choose market cap more than 300, PE less than 20. Then after that, I sort by you. So the Propnex 11.73%. Wow. Okay. This one actually, of course, caught my attention. Very high yield. Okay, then but then I go and dig a little bit deeper. Okay, it's not that they this year give 11.73. Okay, so this is the more accurate one. Okay, this is their more accurate dividend. So this year, their yield is only about 6.5, which you asked me also quite decent. 6.5. Okay. And their dividend is 6 cents. Okay. Okay, I'll explain later how come the stock screener put 11.73. I explain that later. Okay, but I just want you to go away remembering that the yield is not 11.73, but is only about 6.5%. Okay. How come once it dropped to 11.7, drop to 6.5, I think it's still interesting. Number one, I think 6.5% is actually still quite a decent number. Okay, still quite a decent number. 6.5% yield, not too bad. Number two, you can see that their payout rate is actually very high, at least 70%. Okay, so that's why I don't mind classifying this as an income stock, because it seems like they are quite committed to give dividends. Okay, at least 70% over the past 4 years. And currently, if you buy, you are talking about hitting about 6.5%, which is not too shabby. Not too shabby. Okay. So why they actually put 11.73% here? Okay, because they actually did one-to-one bonus issue. Now, what is a bonus issue? Okay, if you want, you can think of it this way. You can think of it this way. The company actually give you dividend. Okay. Then after that, the company issue new share. Then after that, the company take away the dividend from you to buy the new share. So instead of getting more dividends, getting dividends in terms of money, you are actually getting dividends in terms of shares. So you can think of bonus issue this way. Okay, you are getting dividend on share. So actually, to state 11.73 is not totally wrong as well. Okay, hope it's not confusing. If you all need me to repeat, don't mind, just help me type a 0. If you think whatever I said just now, you got it, please help me type a 1. Can it be that they don't? No, they definitely have enough cash. So that's why they actually did a bonus issue. So they could have actually just give it as dividends if they want to. Okay, but instead, no, dividend, okay, not exactly. Okay, when you talk about bonus issue, right, there is more new share. Okay. How should I put it? They are similar in a sense. So a bonus issue, right? Let's say company have 10 shares, right? So after the whole exercise, there'll be 20 shares. There are more new shares. Okay. But for dividend reinvestment, right, it's not for everyone. Okay, it's not for everyone. So of course, if you choose to, yes, then there'll be new share issue. Okay, so it's similar. I would say it's similar. Payout ratio increase a lot to maintain. And sorry, I don't get your comment. You may need to be more specific. What do you mean a payout ratio increase a lot to maintain? Okay. Oh, you're saying that this one. No, payout ratio is actually based on the earnings. Okay, payout ratio is the dividends divided by earnings. So nothing to do with number of shares. Okay. Also, now, if I earn $1, I give my 2 cents. Okay. I don't care how many shares I have. It doesn't matter. Yes, over already. Exercise is over already. The 1-for-1 is over already. Okay, Melvin, when you say dilute, you have to be careful. Now, what does dilute means? Dilute means that your percentage holding of the company reduces. Okay, that's what dilute means. So if let's say, for example, every one of us have 1 share, every one of us own 10% of the company. Okay. After the exercise, everyone have 2 shares. Every one of us still hold 10% of the company. There is no dilution. Okay. So be careful. When I say dilution means percentage holding of the company reduced. When I talk about bonus issue, no, there is actually no dilution. Okay. So my point here is this, it could have been 11.73 if the company, instead of giving a bonus issue, they give out dividends. If they choose to, it's a management decision. If they choose to, then it could have been 11.73. Okay, but instead, they give you a new share, and based on the cash they actually gave in 2023, it's just 6 cents. Okay, so is the yield is actually 6.5%. Oh, by the way, this is 6.5 for after the exercise. For after the exercise. Okay. So which means to say, if let's say before the exercise, they could have actually equal to 12 cents. Okay. Okay, hope it's not too confusing. If it's too confusing, all I need you to remember here is this. Okay, this REIT, okay, sorry, this company, based on the last dividend yield, 6.5%. Okay, to me, not too bad. Quite attractive. Now, so the question here is this, for an income stock, I want to know whether can their business be sustainable. Can they actually bring in, okay, no need for income to grow, but can their income be sustainable? That means more or less about the same. So this is the question I ask when I do all my analysis. So number one, I think Propnex, hope everybody know what they do. They are into real estate brokerage business. Real estate agents. So that is their main business, real estate agency business. They just get a commission for a transaction. So these are their different business segments. Private resale, rental, HDB resale, landed, commercial, and project management. Project management. Okay. So every time they do a transaction, they actually get a commission. So the question here is this, are they going to have enough transaction going forward? So what I see in the numbers here is this. Okay, this chart is talking about private housing unit launched and sold by developers. Okay, so you can see there's volatility up and down. Okay. This chart actually shows the number of resale and subsale transaction. So same, go up, come down. Okay, but then you can see that there is more like a sustainable volume. Okay, so this part actually shows the HDB transaction. So in fact, you can see that it's a slightly upward trend. So what I'm seeing here is this, basically in terms of number of transactions. So the story I'm trying to say here is this, as long as there's transactions, they are going to make money. Okay, or how much they're going to make is correlated to the number of transactions. Okay, and we can actually measure how many transactions are there in Singapore every year. So what I'm seeing here is this, the number of transaction volume is actually quite volatile. Some year got more, some year got less. But what I believe is, generally speaking, is on a sideway. Okay, it's not like, oh, it's like the number of transactions trending downwards. I don't think so. Okay, so in fact, I think that the total number of transactions will slowly trend upwards, given that the population is increasing, given that we are going to have more Chinese coming in. Yep, I believe is trending upwards, but as you can see from the slides here, it's actually volatile. Some year got more, some year got less, but there is a sustainable volume. So in that sense, you stretch out over a 3 to 5 year time period, right? Their income is actually quite stable. Okay, that's what I'm trying to argue here. Okay, hope it's clear. So basically, I'm trying to say here is this: yes, even though that now you see that the transactions got volatile up and down. Okay, but I believe it's sideways. Okay, that means to say that you stretch over 3 to 5 period. There's actually a sustainable. So every year about on average speaking, every year there's a sustainable volume of transactions. And because of that, they are actually going to get a stable income. Their income is also quite stable. And of course, with a stable income, they can actually give what? Stable dividends. That's what I'm trying to argue at. Okay. So don't mind, do me a favor. Of course, different people interpret the chart differently. If you agree with what I said, don't mind just help me put a 1. If you disagree, don't mind just help me put a 0. So I'm arguing that they are going to have stable income because the number of transactions is about the same. Okay, that's what I'm trying to argue at. Okay, good. Thank you so much. So I think more or less. So of course, if you disagree, that's fine. Then probably maybe this one is not income stock for you lah. Okay. So thanks. Like I said, it doesn't mean that all these are my analysis. Doesn't mean I'm right. So feel free to disagree with me. Then of course, if you disagree, then yeah, maybe this is not the stock for you. Okay. Okay. So there is one particular significant risk for this counter lah. If lesser HDB to sell, lesser income from Propnex. No. Okay. So, okay, we are talking about resale. Resale. Number one, if let's say HDB, BTO Propnex don't make anything, it's only resale. So yes, if let's say there's a lesser resale then there's a lesser income. Okay. So there's actually one major risk for this company is they have been talking about it lah. So do you really need an agent to buy or sell a unit So initially I was also quite worried about this risk. That's why this stock I don't really like it lah. Okay, because I believe that one day why you don't need an agent you can buy a property yourself, you can sell property, you can don't need an agent. But as you can see, you realize this article is in 2017. Okay, people have been talking about for so long that you don't need an agent, and yet you can see that the income still keep going up. Yeah. Their income actually still keep going up. Senai job closes unprofit unit. Okay. Yeah, maybe Chinan, I'll look at your article later. Okay, so yeah, later I'll actually show the numbers. In fact, their profit has been increasing even though since 2017 people are already talking about don't need agent. So probably yeah, this risk is not as significant as I thought. Okay, but of course to each his own. You think that no, okay, maybe give another few years, people trade. Then of course this is not income stock, because for income stock, very likely you need to buy and hold to collect the dividends. But if you think that this risk is very significant, very likely that income cannot sustain, then it don't qualify as an income stock really. Okay. Same thing, I do the 6 tests. Okay, please help me take a look. Does the company pass all the 6 tests, yes or no? All the 6 tests pass or fail? Okay, all don't dare to be the first one. Thank you so much. All pass. All the 6 tests pass. Current ratio more than 1, debt equity less than 2, net profit more than 5, interest cover more than 3. So one thing I like about this business is really asset light. Okay, they don't need any equipment and things like that. Basically is, yeah, they don't have to, no capex, no need to spend money buy machine. Okay, very low investment, and because of that they have no debt. They have not much debt. You can see that, yeah, their interest cover is actually quite high. Okay, the debt from banks is actually very minimal. Okay, so quite interesting company. So unlikely to go bankrupt because it's like they don't borrow money anyway. So quite smart business. Okay, I did DCF. I will also email the DCF to you all. Okay, let me just show you how it looks like. Okay, so I was just saying, you can see their revenue has keep increasing, even though people talk about, oh, you can sell service, blah blah blah, so on and so forth. Their revenue has keep increasing, but in the latest year, it actually came down. So that is something for you all to pay attention. So like I said, I'm not pitching this as a growth stock. I'm not pitching this as a growth stock. I am pitching this as an income stock. Okay. What I'm saying here is this. Yeah, this one up and down is expected. Why? Because it is related to the number of transactions. If the transactions for that year is low, then obviously it's going to come down. But I think it will, just go to the sideways market. Okay. Their price before COVID only about 0.2 or 0.2 cents. Really? 20 plus cents. Oh, okay. Interesting. Oh, okay. Thank you so much. How does it compare to Oh My Home? Okay, I'm not too sure. Oh My Home, is it online service? These are basically just real estate agency lah. Propnex is just real estate agency. Oh My Home, I'm not too familiar. Are they an online broker? Oh, we can actually talk about that later. Okay. So again, like I said, I'm not pitching this as growth stocks. I will just buy whole, collect dividend. So I did the DCF. In fact, I'm very, what do you call that? Very risk adverse. Okay, very cautious. I actually assume that they have no growth, no income growth, no revenue growth. And based on my DCF model, okay, even you don't expect any revenue growth, this company is actually worth about $1.32. 132 cents. So currently, the price is 90 cents. Okay, DCF value 132. I am getting about 6.5% dividend yield. Again, 6.5, not 11.73, 6.5% dividend yield. Okay, so probably my dividend will hover around maybe from about 5.5, 6.57. Okay. Buy whole, collect dividend. Okay, now it's still undervalued. Yeah, I think as a dividend counter, this one quite okay. So this is my conclusion for Propnex. So this is what happened. Like I said, today I don't find an opportunity for growth. I think I will put 50% of my money income. So if let's say my 50% is enough, I will invest in all these three lah. There are two REITs that I point out, and this income stock, this particular income stock. Also, this is what I will do lah. So let's say my 50% is enough money, then I'll just invest in this three counter. If not, maybe just the two REITs. So of course, if you actually don't see the story for this Propnex, then of course maybe you just want to stick to REITs. What I'm trying to say here is this: if you want income stocks besides REITs, there are also many companies in SGX that give very good dividends. Okay, Propnex is one of them.